It is Wednesday, August 8th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. It was a very painful get your ass kicked at Jiu-Jitsu Wednesday. We were doing some stuff from the old north-south position, and I actually like north-south. It's there's a lot of places you can go from it. There's a lot of different transitions you can do in it. Although I don't know what it is, but I ended up tweaking my back like really early in class, and so like we didn't do any sparring until the last part, and the last 15 minutes of sparring, and the last match was me against the instructor. And yeah, so like I said, it was a very painful get your ass kicked at Jiu-Jitsu Wednesday. I don't know what it was, but I must have been trying to get my neck out of something or whatever. The guy was rolling with is very technical, very tough, very technical. But it's funny because he's not as strong as I am, but I mean he's very strong nonetheless. And I catch him now and then trying to fight my strength, but most of the time he's just waiting for me to fuck up, and he's very patient. And every once in a while he'll fight against my strength, and when he's trying to hold me in something or twist me to something, and I'm twisting out, it's usually an efforted affair. And so today I was trying to get out of something he had me kind of in. And I did get out of it, but it was painful. So I managed to get my back popped right again, but it's still sore. You know, it's like after you've gotten it to pop or whatever, it's caused all the muscles around it to tense up, you know. And so it's no fun. Can't move my arm without feeling it. Damn it, Jim. Oh well. That's the reward I get for a very spirited youth, let's just say. But yeah, like I said, north-south, and I couldn't tell you exactly where I like to get to most from north-south, but like I said, I do enjoy it as a position to get into. You know, I mean, if I've got you in north-south, usually I've got one of your arms tied up, one of them, and it's not a good position to be in with me. You're almost better off with me in side control, although that's not very good either. But as always, today was proof positive that no matter how tough, no matter how good you get, there's always somebody better. Always. And so, you know, it was, again, one of those little ego tampers where, you know, my excitement gets a hold of me and then somebody brings me back down to reality. But, you know, it's humility. That's the lesson to be learned there. Humility. Yeah. Anyway, let's go ahead and throw down into some music because we have not had a first dance yet. And, fuck it, Cold Chamber, Loco, first dance here on Coin Metal. And that was Prong with Absence of Light. I was just going to let it roll because that is Slipknot, but I'd figured that, you know, we'd had enough music. It was time to get to the meat of things. You know, get back to the story. The grind. Man, my back is killing me. Whoever it was that I tweaked my back with, bravo on you, dude. Knowing me, it was Natalie. She always kills me. Anyway, continuing on to some stories. I actually have some stuff I wanted to talk about today. I bothered to accumulate a tab or two. And if I can get this one to fucking load up. I just had it. What the hell, man? Oh, alright, well. that one I'll probably come back to. But anyway, the stuff that I've got to talk about, I think is more important. Well, I want to start off with this one because it's got our old friend Mr. John McAfee in it. CryptoBriefing.com. 3 experts and John McAfee explain the future of Bitcoin. Okay. A trio of sober, intelligent, thoughtful assessments of the crypto market, and this is by Nick Hall, authored on August 8, 2018. So yes, penis. It has been a savage time for cryptocurrency markets, with Bitcoin and Ethereum taking a prolonged dive and others providing erratic and predictable proving erratic and unpredictable. Bitcoin reached the heady highs of 19,000 before slumping to 6,000 in June. Amidst the chaos, fortunes have been made by those who have read the peaks and troughs of the market, as well as the potential impact of regulation and new coins. Volatility breeds opportunity, after all, and it's simply a case of making the right calls. It's easier said than done, but one way to keep ahead of the curve is to simple see what the leading lights in the cryptocurrency have to say about coming weeks and months. So what do the leading experts in cryptocurrency think lies ahead? Is a bull market just around the corner, or are we in for a winter of discontent? Number 1, Tom Lee. Fundstrat's global advisors Tom Lee, a regular on CNBC, is bullish about the bounce back coming for Bitcoin. Despite the slump, Lee claims that Bitcoin taking back its market share is what we should really be looking at. Bitcoin was 80% of the cryptocurrency market at the start of 2017, which dropped to 36% by the end of the year. 36%, that is. It has slowly crept back since then and has leapt in recent months to 48%. Recent weeks to 48%. But that has not been enough to arrest the slide. Lee thinks, though, that it will spur a revival in the end. He also thinks the recent SEC ruling that confirmed Bitcoin's status as a commodity rather than a security means that crypto investors will seek refuge in the, quote, best house in a tough market. Lee points to new deals between the Intercontinental Exchange, Apple, and Microsoft are the start of a new dawn for cryptocurrency. Increased legitimacy in the eyes of the public is set to open the floodgates in terms of investment. That is Lee's angle, and it's a brave one that isn't widely shared right now. Well, actually, I'm a little braver than him on that. In the long term, he may well be right, but investors that follow his advice may have to suffer a little pain before the predicted turnaround. It's high-risk advice, then, because new investors will start in a hole. 2. Tour de Meester. The Austrian economist and Twitter legend isn't swayed by the sudden upturn in Bitcoin that Bitcoin saw values rise by 2.5% in a single day. He suspects the bear market is here to stay, and his reasoning looks solid. De Meester points to the 2011-2013 price surge when Bitcoin rallied 500 times in 24 months. A bear market followed that lasted for 14 months. De Meester revealed that in 2015 to 2017, Bitcoin rallied 100 times in 35 months, and we are now in month 9 of the bear market. In 2011 to 2013, Bitcoin rallied 500 times in 24 months. It needed a 14-month bear market to find a bottom. In 2015 to 2017, Bitcoin rallied 100 times in 35 months. So far, it has seen a 9-month bear market. That was toward Easter, August 7th, 2018. The implication is clear. The market hasn't bottomed out yet, and Bitcoin has some way to go before it turns around. Demeester believes it will turn, but not yet. He also believes that the newer coins could face tumultuous times in this bear market, as the miners are forced to sell coins to keep their power running. It's an esoteric point, but this alone could be enough to tip a younger coin with a high inflation rate into a slide. So if you have a broad portfolio, according to Demeester, you should look for the early signs of panic selling and be ready to cut your losses on an outside bet. Number 3, Gavin Andresen. The Twitter mainstay who has denied reports that he is the real Satoshi Nakamoto, the inventor of Bitcoin, believes Bitcoin is in for a rough ride for a while. He believes it is a seasonal pattern that affects the entire cryptocurrency market, and there's simply no way around it. Quote, feels like we're in another summer slump for crypto assets. Mike Hearn wrote about the pattern 3 years ago. Gavin Andresen, that was June 20th, 2018. Andresen points to a 3-year-old article on Medium that spells out the crypto seasonal affective disorder. Bitcoin's performance doesn't bear out the theory entirely, but Andresen seems to agree that discrepancies are due to skyrocketing prices creating bubbles that distort the market. In essence, though, without major inputs forcing the market out of equilibrium, Andresen suggests that we're set for a slump every summer. Of course, this is saying quite a lot without saying much at all, as there can always be a rush on the market, and predicting those spikes is what smart investing is all about. It's fair to say, though, that if Andresen is right, you will have to swim against the tide for the rest of the summer. The market will recover and the traffic increase in winter, which helps the market follow more predictable trends. Number 4, John McAfee. You probably shouldn't listen to everything John McAfee has to say, but he does have an interesting perspective on the cryptocurrency world. He has called bull markets before, and he's convinced we're about to see a complete turnaround in Bitcoin's fortunes. The eccentric Twitter personality, what does he do, had the following to say on Bitcoin's future. Quote, Bitcoin, $1,000 increase in 1 week. Is this the bull market? I have no clue. 10 such increases in succession, and I will consider it. Bull. In the meantime, know this. The bull market is coming. And when it does, it will make the eruption of Krakatoa seem like a meerkat's burp. And it's a colorful image from an undoubtedly colorful man. But the message is clear. If you're not on board when Bitcoin takes off again, you might miss the boat entirely. Now is the time to invest. So if you trust John McAfee with your future, in which case we have an amazing multi-lever marketing opportunity for you, then it's time to bet big on Bitcoin. Yeah. Well, I don't know. I've expected some sluggishness. I think that a lot of the quote unquote institutional money is sticking in OTC markets, and they're coming in and they're buying, but they're buying from people at whatever retail is at the market, right? But they're not doing it on the exchanges. They're doing it OTC. And because of that, we're not seeing the exchange of volume, the volume exchanging hands, And because of that, we're not seeing those market signals, and we're not seeing the increase in demand. But that's to be expected for right now. It's to be expected. See, I think that after a while we're going to start seeing some backlog on the old blockchain. The whole thing with off-chaining a lot of transactions, I think that's more detrimental to Bitcoin than anything. Just because it cuts down on the visible demand of Bitcoin. If you're doing all your transactions off-chain, nobody can tell how many transactions you're doing until the end, right? And even then they can't, because it's just reading as one transaction on the blockchain. So, I don't know, it'll be really interesting to see how this plays out going forward. I think what's going to end up happening myself, and this is just my little feeling about this, is that we will see either kind of bouncing around where we're at right now. I would expect probably a bump up from now. Maybe in a month we'll see like 8,000 again or something like that. But for the most part, I think we're just going to be in accumulation. That people are waiting for disbursements of QE and all that other shit to be coming out, and they will be coming out. We're going to need that fiscal stimulus just to make our way through Christmas. And of course, I think that we'll see some additional investment in this space from those monies. It's like the grandma gives the kid $100. What's he do? He goes and he buys Bitcoin with it, or Bitcoin Cash or whatever. But the point being that I think that's when we're going to see some increased interest. It's just a matter of people not having the money to throw at it, number one. Number two, I think a lot of the market signals are being distorted a little bit. But in the end, it all has to hit flow. It all has to come back to flow. If all kinds of money is being tied up in Lightning Network channels, we're not seeing that traffic on the Bitcoin network. That'll be good for those of us who want to stay on chain, because it'll remain relatively cheap for us to transact. However, it won't truly convey what the real demand for Bitcoin is. And I think in the longer term, we're going to have one of these monkeys do the fractional reserve thing, fuck up, like there's a major spike or something like that. I mean, let's put things into perspective. Okay, we're year 10 into this. Okay, we've had global exchanges for at least 8 years of that, right? And yet still, OKX has to do a clawback because somebody wrecked their reserves when they liquidated a short or something like that. Give me a fucking break. If you can't do that, you're not going to be able to do fractional reserve trading or fractional reserve monetization or financialization or whatever the fuck you want to call that shit. You're going to get wrecked. I'm sorry. It's the difference of dealing with IOUs that you can just wave a magic wand and create way more of, and a real asset that you have to dedicate hundreds of computers and thousands of hours of processing time to mine. There's a significant differential of effort going on here, kids. And I mean, there is an upper limit on production. The shit doesn't just fall out of the sky. You got to mine it. And it's only dispersed another 12.5 every 10 minutes. So even if you are getting all of them, if you're running a significant fractional reserve and you get wrecked, that's it. That's done ski. Bankruptcy, lawsuits, jail cells, the whole works. The GR Boo Foo awaits us all. Anyway, I'm not going to go into that right now. I got this other article here on CoinDesk. And this one kind of caught my eye because it's Amir Taaki. And he was one of those guys that initially popped up in, like, I want to say 2011, 2012 on social media. Most notably like YouTube videos and stuff like that. And he was one of those guys shouting the song of revolution with regard to Bitcoin. And I think he's been living a little bit further into the future than a lot of other people. Anyway, this one's on CoinDesk. Code is a weapon. Amir Taaki wants you to join the real crypto revolution. This is by Rachel O'Leary. We don't do 3 names. So no penis. This is authored on August 8th, 2018 at 4 UTC. There are many words that could be used to describe Amir Taaki, but today, ambitious is best. The infamous Bitcoin developer known for co-creating Dark Wallet, Dark Leaks, and OpenBazaar took the stage during a hackathon he hosted in the wake of the Privacy Enhancing Technologies Symposium in Barcelona last week, the same city where he plans to set up his academy of coders, hackers, and philosophers dubbed Autonomous Polytechnics. It's a bit of a shift, about 1,800 miles to the west from Taaki's earlier idea, which was to build the academy in Greece. But with a toolset focused on anonymity and autonomy, it might make more sense to build the project in the capital city of the autonomous Spanish community of Catalonia. Spending no time mulling over the decision, Taaki took to sketching out his political vision on a dirty whiteboard. In a series of diagrams, Taaki described the evolution of biological cells, the structure of societies, and the impact that technology can have on such systems, sparking runaway trends to monopolization, or its opposite, atomization. Tying the latter to the Unix philosophy, a branch of coder theory that vouches for minimal and modular units of software, Taaki then exposed the upcoming product suite his academy will build. Albeit loose mathematical sequences, the audience could tell the scripts comprise the details of an entire dark machinery, a kind of subterranean Web 3.0, distilling the wide-ranging talk. One attendee quipped, quote, "plans to anonymize the world." And while Taaki insisted the details on the whiteboard not be published for fear they be co-opted, quote, "there's a lack of ideas in this space," he told CoinDesk. "It's clear the tooling he's got in mind would be a revolution," which is exactly what he wants. Having left Bitcoin development to fight alongside a Kurdish militia in Rojava, an autonomous region in northern Syria, Taaki is hoping to spread that region's practices of democratic confederalism, a political theory that advocates for small self-governing communities. Quote, "Every revolutionary movement needs to have a technological arm, and we are that technological arm of the democratic confederalist movement," Taaki told CoinDesk. Quote, "This is our objective as an organization, which is using technology for autonomous democracy and the collapse of the system of nation-states around the world." Yeah, I don't think that's going to work out, dude. Politics and tech. To make this happen, Taaki expects participants of the Academy to undergo a strict training regimen. Newcomers are subject to a 3-month introduction period, one that repeats every 6 months to 1 year. Quote, "It's a vehicle for developing them as leaders to develop their skills technically, socially, and being able to effectively organize other human beings and coordinate together tightly," Taaki told CoinDesk. While there's room for ideological diversity within the organization, for example, Taaki wants to set up multiple tiers of participation and a system of elite academies globally. Core attendees will need to follow careful timetables, give up their engagements, and dedicate themselves fully to the project. Dude, it sounds like he's trying to create a nation himself. Quote, "Together we can elevate each other higher. We can learn from each other. We can dedicate ourselves to a sense of purpose and become stronger," Taaki said. Quote, "And because we gain something from this, we are willing to forego certain comforts of life, certain smaller freedoms for an even bigger freedom that we want to grasp." For himself, Taaki lives a rigid lifestyle, lifting weights, measuring his meals, avoiding weed and alcohol. Oh, you lost me right there. And with the occasional snide remark about, quote, "lazy hacker culture," he doesn't hide his disdain for those who don't. Quote, "You can't party and have the revolution at the same time. They're mutually incompatible things," he told CoinDesk. Dude, let me explain something right there. The party is the revolution, kid. Continuing on. That's one of the outcomes he fears for Bitcoin and even for the cryptocurrency community as a whole. That while it has attracted some of the best minds in technology, there's a risk that it will simply devolve into play. Pfft. Dude, that's what it always was. You just took it too seriously. Quote, "There's a danger that Bitcoin, as this transformative tool to liberate humanity, will just be turned into a nice subculture where we meet up with friends at conferences and a few geeky people play around, make investments, but it's nothing more. And the potential that truly exists inside of Bitcoin does not get realized," he said. No. Your vision for Bitcoin doesn't get realized. It's because you can't tell me how to Bitcoin. You cannot tell me how to prioritize Bitcoin. You cannot tell me what politics to support with my Bitcoin. And I'm sorry, bro. I'm not going to support you because you take yourself way too seriously. I can imagine that in your tightly knit little army of subversive mercenaries or whatever the fuck, that there's not a whole lot of room for individualization or individuals, period. And I'm sure nobody challenges your authority within your little core group. I mean, because you lift weights, clearly demonstrating that you intend to be physically superior to the vast number of people around you. That's why I do it. So, yeah, I don't like where this is going. I can smell another Scientology breeding between this guy's ears, but that's just my feeling on it. Let's see. That drive is a mix of both the democratic confederalism, I smell socialism, of the Rojava movement and a distinct theory of technology theorized by the American philosopher Lewis Mumford. Oh, and you know, with regard to that whole Rojava thing, if this mentality was so welcome there, why isn't he still in Rojava? I mean, you know, if he was living his idealistic life there, why isn't he still there? Maybe they kicked him out because he wouldn't party. The basic premise of democratic confederalism is self-governance, but the theory also elevates environmentalism and feminism. Oh, definitely kick me the fuck out of it right now. I'm on board with environmentalism. I believe that humans can be much better stewards of the environment and their own diets. However, feminism, to me, is going a bit far, and I'll tell you why. See, I think that feminism is putting femins above men's. And in my mind, that's just the opposite of, well, no, it's just sexism. You know, let's just get down to it. You want to define people by what they got between their legs, and I'm sorry, that's just insufficient as far as I'm concerned, because it ignores the entire potential of individuals and renders them down to their fucking genitalia. So, fuck you with your feminism. Continuing on. On the other side, Mumford suggests that there are two types of technological process, monotechnics and polytechnics. Whereas the former creates global top-down single-purpose technologies, polytechnics conceives technology for users across socio-political contexts, and it's the latter that Taaki believes can bring about change. Yeah, by the fucking market deciding what it wants to use, not by you pointing at the fucking market and dictating to it. Continuing on. We believe in technology. We believe in building technology on a human scale for humans to employ in many different contexts to solve problems they face, Taaki told CoinDesk, adding, Oh yeah, and no choice involved there, I bet. The technology needs to be targeted for socio-political change. No, it doesn't. It just needs to fucking work. It just needs to do what it's designed to fucking do. Not just find the perfect mechanism to make people comfortable. Give me a fucking... Never mind. Continuing on. Exhausted ideas. Not only the fears of Bitcoin becoming just another fun fad, but Taaki also believes what's missing from the first and largest cryptocurrency is the idea of polytechnics. According to Taaki, Bitcoin's failure came from the belief that the technology itself was sufficient to enact global reorganization of power, and simply inserting it into systems, human freedom would increase. Hold on one second. Let's give me a little flag. Usually does that when something's wrong. It's looking like we're good though. So continuing on. According to time, blah, blah, blah. Quote, everybody thought that Bitcoin would come as this huge inevitability, he told CoinDesk. You saw this also, people talking about the honey badger. The honey badger can't be stopped. There's a sense of inevitability or linear historical trajectory. However, that vision failed in part due to an inability for Bitcoiners to propagate the political concepts inherent to the technology and adapt the tooling to constantly evolve with the landscape. Quote, technology is the means or the instrument of power that we use for shaping society, but we are fundamentally the drivers of that technology, Taaki asserted. No, the market is, dude. In this way, Taaki's central tenet maintains that without ideological purpose, technologies cannot survive. Quote, the problems with Bitcoin are in no way technical. They are deeply social and No, you're full of shit, dude. They are technical. It's very, 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 very simple technical problem. The blocks are too fucking small. Continuing on. The ideas behind Bitcoin have exhausted their potentiality to be able to advance that project forward. Yeah, you're full of shit, dude. And this seems to be stern according to this seems to stem, according to Taaki, from the prevalence of, quote, engineering mindset. There is an elite inside Bitcoin. They have a very particular way of seeing the world, and that viewpoint of the world, which sees things in a very technical way, in some cases can be extremely limiting. He gave an example of the Lightning Network, which, while it solves a much-needed technical problem, scalability, it cannot solve the wider societal issues surrounding the cryptocurrency's lack of adoption. At the same time, corporations and central banks are co-opting the technology, developing more usable projects, and overtaking the cryptocurrency market. No, they're not. Quote, unless there is a fundamental correction in the course of events that we're heading into now, that is what's going to happen, Taaki warned. And that's a large part of the work he's trying to achieve with autonomous polytechnics. Where's the money? At the time of writing, Taaki and the earliest enlisted members of the revolution are squatting at the historic home of the Cooperativa Integral Catalana, a cooperative that spawned a cryptocurrency of its own, Faircoin, but the plans for their own academy are laid out. It'll be located at the base of Carmel Hill, stretching across 8,600 square feet, containing a shared workspace, living quarters, a garden, and if they have enough money, a basement that can host conferences, hackathons, and other events. Taaki has even designed a special flag for the Academy in the colors of the organization, green and black, with a blazing sun as a symbol of technology in the center. And with that, there's no shortage of interest from potential participants in the program, many of which are currently living with Taaki, and told CoinDesk they're excited to begin, but still they wait. Quote, "It's been almost a year now, and we're still waiting to get started," Taaki told CoinDesk. Part of this stems from the construction of the building, which is slow going, but another thing stands in the way too: lack of funding. Taaki is looking for $10,000 to $20,000, merely a drop in the bucket compared to the large amounts of money being raised by sometimes suspicious initial coin offerings. However, many investors have been unwilling to donate without a promise of something in return. But the Academy's plans are to create free technology, and even its business arm would merely be a mechanism for funneling excess profits into the support of democratic confederalism around the world. Quote, "Right now, to get established, we're trying to get donations, which is kind of difficult because despite the rhetoric, a lot of the people in the crypto space are very stingy," Taaki said. At the moment, the project is being sustained through donations from Cody Wilson, the co-creator of Dark Wallet and the infamous creator of the 3D printable Liberator pistol. But Taaki would like to diversify those donation streams, and at this point he's running out of options. Laughing, Taaki concluded, "Dude, at this point I would take money from African dictators." Yeah, you know what that's an invite to? That's an invite to intelligence organizations. We're more than willing to hack for you to get money for our audacious project. You know, I don't know what to say about this stuff, honestly, because somebody might come out of nowhere and fund this guy. But honestly, I see him as kind of like one of these David Koresh kind of guys, where he's a charismatic, you know, and it's probably not even about technology at the core for him. It's probably just control. The idea that he's going to correct society and he's got all the answers. Dude, you might be smart, but you cannot tell people how to do Bitcoin. It's one of the problems that I keep running into on this, is that there's this impression out there that you can just change one little thing, or you can just say something, and the market is just going to do what you say to do, and that's never been my experience. It's not been my experience in regular markets, and it's certainly not been my experience in cryptocurrency markets. You know, I mean, we're all very, very self-interested here. Yes, Mr. Taaki, we're very, very self-interested. And while banks are making their own little projects and whatnot, what their projects lack are users. The only users they have are either A, ones that they're fraudulently onboarding, meaning they're using blockchain without telling their customers, or those that are going along with it because they think that Lightning is the way out. And you know what? That's a legitimate feeling to have. And I as much as I talk shit about the idea, because I see it as nothing but a return to Visa, There are people that honestly believe in that as a means of scaling the transaction capacity of Bitcoin. And you know what? More power to them. There is certainly room for that kind of thing in Bitcoin and cryptocurrencies. However, personally, I feel it's entirely fundamentally flawed. This is a game. Just like any other monetary system is, it is a game. The difference is we make the rules now. And you guys keep trying to fucking talk us into these technologies that will put the rules in the hands of other fucking people. Trusted third party. As soon as you hear the words trusted third party, you have to understand that you're talking about A, giving up your custody, B, giving up responsibility, and C, giving up control. That's it. As soon as you start introducing quote-unquote trusted third parties, you're substituting them for your own control, your own responsibility, and ultimately your own coins. So, really, you got to weigh that one out very, very conscientiously. And I mean, honestly, I don't see a whole reason to put any kind of automatic push mechanisms or anything like that into cryptocurrency transactions. I think the more control we have over them, the better. That if you have the option to bow out and not add a goddamn minor fee to it, you should be able to do that. I mean, so what? It's going to slow your transaction down on the network. It's probably not going to get picked up on the first block. Who cares? It's a matter of getting the transaction to clear, sending money to anybody on the planet, anytime, without having to ask the permission of anybody else, without having to adhere to the hours of operation of anybody else, because these markets operate 24/7. Which means we also have a direct accounting of how many new units are created every 10 minutes. We have plenty of means of checking that. And so the idea of needing derivatives to make up for lags in the market of either liquidity or anything like that, it's kind of silly. Because what it really means is that you don't have the coin right now. Not that the coin isn't going to be available, just that you don't have it. And if you don't have it now, chances are you will never have it. So rather than giving you money for it, I should just buy it myself and just deal with whatever volume I'm able to get from the market. Anyway, let's go ahead and throw back down into some music. I'm going to put a little prong on the end of that. So, let's see here. I haven't been playing a lot of Rivers of Nile. And they're pretty tasty. So, let's throw it down. The Silent Life. Here on Coin Metal. And that was Seeing Red by Killing Joke. Yeah. And so, I wanted to get a little bit deeper on Mr. Tom Lee's perspective. Apparently there was an article dedicated specifically for him out there. And let's verify that this is an actual article, not a propagated shit. Yep. Alright, it's real. Okay, and this is by Helen Parts. So no penis. This is authored about 12 hours ago. Fundstrat's Tom Lee. Bitcoin Misery Index indicators show the crypto isn't broken. Bitcoin isn't broken if it's holding at the current price and volatility levels, Fundstrat's Tom Lee said to CNBC's Fast Money on August 6. In the interview, the Wall Street Bull referred to the current indicators of Fundstrat's recently launched Bitcoin Misery Index, BMI, which aims to inform investors of how, quote, miserable holders of the currency are based on the price and volatility. According to Lee, when the index is below 27, it shows that future returns are very good, while if it surpasses 68%, it is time to sell Bitcoin. Pointing at the index's current number of 39, Lee concluded that the momentum is recovering, noting, quote, Bitcoin isn't broken if it's holding at these levels. I think people are afraid it is going to go back down to 6,000 and never come back up from those bear markets. That's folly. Fundstrat's head of research also pointed out the current levels of Bitcoin dominance in the crypto markets, which has surged up around 48% over the past several weeks after dropping as low as 37% in July. As Lee explained, the fact that major cryptocurrency keeps gaining momentum in terms of market share is, quote, actually showing the market is reacting to what's been taking place. Lee also pointed at the recent biggest news in the industry, which is such as the Intercontinental Exchange ICE's announcement of developing a new global assets platform, as well as U.S. Securities and Exchange stating that Bitcoin is not a security. On August 3rd, ICE, the operator of 23 leading global exchanges, including the New York Stock Exchange, announced its plans to build an integrated digital assets platform to enable customers, merchants, and institutional clients to buy, sell, store, and spend digital assets on a, quote, seamless global network. Yeah, whatever. In the beginning of July, Lee repeated his stance that Bitcoin could reach anywhere between 22 and 25,000 by the end of 2018. Earlier this summer, on June 27th, Lee had predicted that the BTC downtrend that took place in June would be reversed if Bitcoin could push through a resistance point of 6,300 to 6,400. The thing that that bugs me about all of these people making calls about Bitcoin and whatnot, a lot of them are basing their opinions on things that are happening outside of the crypto sphere. Like this whole idea that the SEC stating anything about Bitcoin has anything to do with the price. No, it doesn't. The only people that makes a difference to is the SEC and the people who give a fuck what the SEC has to say about Bitcoin, which, in my mind, the vast majority of the people involved in crypto really don't give a fuck about what the SEC or the CFTC or anybody else has to say about cryptocurrency. I mean, there are a few, higher ups and whatnot, and OGs that really care, and I like to point it out on this show only because, well, I don't want anybody to run into a wall, especially with a potentially fraudulent endeavor, which there are several in cryptocurrencies, as if you haven't figured that out already. Not to say that that's what the majority of projects are. It's just that things have a way of shaking out, I mean, people don't plan their finances properly, and then we run into a bear market like this. People lose interest, but the thing that gets me, like I was saying about these perceptions about the Bitcoin market, I think a lot of these people are discounting the organic indicators that we actually have within Bitcoin. Things like transaction volume on the Bitcoin network. Things like the amount of hashing power that's being dedicated to mining Bitcoin. These things are all pointing to increased valuation later on. But more importantly, again, these people do not have any say in how people will respond to economic issues that they're facing. We all have our own risk threshold, how much risk we're willing to entertain with our investments. And we all have a different level of necessity with regard to cryptocurrencies, how much they represent of our total income or total monetary value, or wealth, rather. And so, these factors are what make us make our own decisions about cryptocurrencies, which ones we're willing to invest in, what means we're willing to invest in them, how much we're willing to dedicate to them, how long we're willing to dedicate it to it, and exactly when we want to disperse it. And because of that, it throws all these monkeys off. They don't have accurate indicators pointing to why people do things with regard to Bitcoin. You know, it's like we're going to go into it right now with Venezuela. You know, while the United States and anyone else transacting in U.S. dollars might not be noticing a significant appreciation in value versus the money in their pocket at the moment, that's not true elsewhere. And it is only so long before things like this have a greater impact or have an impact on the greater market. And we saw it with regard to, what was that place? Zimbabwe. Previous to the $20,000 spike on the Bitcoin market in the U.S., there was a significant appreciation of value of Bitcoin in Zimbabwe. You know, while it was about $2,000 in U.S. markets, it was about $8,000 in Zimbabwe when you actually got done with the conversion rate of Bitcoin to Zimbabwe dollars to U.S. dollars. That's what you ended up having to pay, is $8,000. Or if you were smart and you were buying at OTC for paper bills, that's a whole different story. Anyway, this one's on the Bitcoinist.com. Venezuela, the price of Bitcoin is now doubling every 18 days. This is by Georgiev. So yes, penis. This is authored on August 8th, 2018 at 1500. No indication of time zone. Fail, Georgie. Fail. Continuing on. The price of Bitcoin in Venezuela is now doubling roughly every 3 weeks as hyperinflation continues to plague the country. At the same time, Bitcoin trading volume keeps hitting record highs as people are scrambling for an exit. 86,857% annual inflation rate. Just a year ago, a cup of coffee in Venezuela would have cost about 2,300 bolivars. Today, however, according to Bloomberg's Café con Leche Index, you'd have to pay roughly 2 million bolivars. What better way to exemplify the rampant inflation plaguing the country? Unfortunately, it doesn't stop there. The International Monetary Fund projects that the inflation rate will hit an unparalleled 1,000,000% by the end of 2018. In other words, at the current inflation rate, prices in the country are doubling roughly every 18 days. The wide majority of the country's citizens are reportedly living in poverty, having to spend astronomical amounts of money on simple day-to-day staples like flour, eggs, and bread. Bitcoin to the rescue? Bitcoinist reported earlier in June that hyperinflation is causing a Bitcoin buying spree, which marked new highs every week. This trend is not only continuing, but it's growing in rampant rates. Since June, the weekly Bitcoin traded volumes have more than doubled, reaching upwards of 17 trillion bolivars worth of BTC this week alone, according to Coin.dance. At the time of this writing, one BTC is worth just under 1 billion bolivars, according to exchangerate.guru. The actual exchange rate in the country is unknown amid a thriving black market, as the country's central bank, Banco Central de Venezuela, has become an unreliable source due to the hyperinflation. The astronomical increase in the traded volumes of Bitcoin in the country, however, signals that locals are looking for an alternative store of value. The constant appreciation of Bitcoin's smallest unit, called the Satoshi, against the Venezuelan bolivar is a prime example of the ultimate fate of fiat currencies. As the hyperinflation goes on, Bitcoin adoption is only expected to further accelerate within the country. Yeah, I expect that to continue throughout the world. Let's see here. Let's get on some comments here. Let's see. Scam hunter, really? When altcoin holders doubles your cryptocurrency after 7 days, altcoin is what? Blah, blah, altcoin holder. Yeah, whatever. That looks like a bunch of scammers. Anyway, yeah, Venezuela, price of Bitcoin is now doubling every 18 days. Now, see, as far as I'm concerned, Venezuela is like a live test of what's going to happen everywhere else. Everywhere else that transacts in currencies that aren't backed by anything, such as US dollars, they're going to experience this, where they think they can print their way out of debt, and just as anybody figures out by the time they're 21 and out on their own since 18, you cannot pay off one credit card bill with another credit card. It doesn't get you any further out of debt. It just exchanges the debt's hands from one group to another. And yeah, I expect the same thing to happen pretty much everywhere else. That we are going to see these explosions of rampant inflation in global currencies, such as the US dollar or the euro or the yen or whatever, or the bolivar. We're already seeing it with the bolivar. Like I said, it's not going to end with the bolivar. This is a natural death cycle for every fiat currency that's not backed by anything actual, any physical commodity, or where it's become too debased by the entity issuing tokens or certificates against the volumes of gold that they actually possess. And I'll tell you another thing. It's not going to make it any better switching these vehicles over to crypto. It's going to make it worse. Because not only are you accountable for them, but they are digital. Anyway, we're not entirely out of stuff to talk about today. I got this other one I really wanted to cover here. Let's see. Fundstrat, we already covered that. Venezuela, we already covered that. I'll tell you what, like I said, Venezuela, we're going to see that elsewhere. Oh shit. But here's the basis for what we're talking about right here. And I'm just going to say it right now. You might be able to get this to work once. You might even be able to get it to work for a couple of years. Okay? But eventually, one of two things happens. Either A, a market correction that you were not anticipating, usually caused by some sort of catastrophe or change in policy or some shit like that. Or number two, you start depending on your model too much, and you over leverage, and then you get wrecked. That's one of two ways this works. The third way is, as soon as you reach parity, you get the fuck out. That's like the only safe option. Anyway, this one's on the Bitcoinist.com. Why Bitcoin collateralized loans still work in a bear market. Okay. This is by Wilma Wu, August 8th, 2018 at 10. Or, I'm sorry, at 1600. No indication of time zone. Despite talk of Bitcoin heading higher in the second half of 2018, many long and short-term holders are growing impatient or are even being squeezed out of the market. Hodl the pain or reap the gain. The result of a long, slow decline in Bitcoin price, $6,367.93, which began following the cryptocurrency's all-time highs in December of 2017, social media and community forums are awash with commentators slowly and highly reluctantly exiting their positions. Not me. The phenomenon does not affect everyone. Research data from Q2 this year shows that around 50% of the Bitcoin supply is used for investment rather than trading purposes. For some, however, holding has become untenable, and the trudging status quo of Bitcoin markets has given birth to a new fledgling market sector aimed at offering an alternative. Through successors of a trend begun by cryptocurrency P2P loan platforms such as Bitbond and BTC Jam, the concept of putting hodled cryptocurrency to work in times of market downturns is gaining popularity. Quote, miners have to pay fixed electricity, warehouse, and cooling costs, etc., no matter what the current exchange rate is, and often they have no other choice but to liquidate the crypto they are mining now at these awful rates. Kasabai, CEO of the in-the-works lending platform Inlock, said discussing current Bitcoin market characteristics. Quote, if they had the option to get fiat loans using that crypto as collateral, they could preserve the crypto and be able to wait until the exchange rate normalizes. Liquidation no longer means, quote, or hashtag wrecked. Kasabai is speaking within the context of Inlock, his nascent project which aims to offer fiat loans to holders in exchange for their crypto. The concept aims to appeal to investors during periods of price suppression, as even if rates decrease further after handing over their crypto collateral, investors will have fiat and they can buy back in at current levels. Quote, in the event of liquidation, investors can purchase pretty much the same amount of crypto from the fiat loan they took out originally, Kasabai added. Bitbond, which provides public statistics for its loan volumes, has to date processed around 3,050 requests from over 150,000 users, a combined loan amount of almost $13 million. Along a flat trend, loan popularity shot up in Q3 2017 as Bitcoin prices began their trek to December's $20,000 highs. By far the most popular loan period on the platform is 12 months, covering 85% of the total. What do you think of these cryptocurrencies as collateral for fiat loans during low markets? Let us know in the hands below. You know what I think of it? I think you're giving somebody else your Bitcoin to buy hookers and blow with. I mean, really, come on now. I think that, again, these guys are just as likely to get wrecked as anybody else, and somebody else getting wrecked with your Bitcoin is no better than you getting wrecked with your Bitcoin. Actually, it's a little bit worse because 9 times out of 10, you would have been able to look at it and say, you know what, it's probably a good idea to get the fuck out of this right now and preserve my wealth rather than watch it get flushed down the fucking toilet. You know? And maybe those guys that are loaning your cryptocurrency out, maybe they don't have your best interests in mind. Maybe they're betting against you. Maybe they're using your coin as collateral for people to do leverage trading. You know, what if they get wrecked like OKX again? Then your Bitcoin goes away and your loaner probably defaults and goes bankrupt. Yeah, so I don't really see these as the best means of getting through a bear market. I still say the safest hands are always your own. The best wisdom is always your own. The best risk assessment is always your own. Manage your own fucking risk And do not put it in the hands of third parties, because they will just fuck it up. That's all there is to it. Anyway, I got this next article here, and this one I've been kind of holding off on. But I think this kind of ties into what we've been talking about, and it might give us just enough time, article-wise, before we have to go to our next music break here. But this one's on the Bitcoinist.com. Lightning Network passes 3,000 nodes. Capacity approaches 100 Bitcoin. This is by Wilma Wu, August 8th, 2018, at 11 o'clock. The Lightning Network active on the Bitcoin mainnet has passed 3,000 nodes with capacity for almost 100 Bitcoin in August. Capacity expands 85% in July. I bet you it's that one dude. He just came back. He just came back with more fucking Bitcoin. Data from monitoring source 1ml.com confirms that network capacity increased 85% in the past 30 days, bringing mainnet Lightning's total funds accommodation to 97 Bitcoin, $628,000. Lightning originally debuted at around the start of 2018 in its mainnet form, with a growth accelerating through Q2 rather. In May, Twitter commenter Kevin Rook notes capacity remained comparatively low at just 18 Bitcoin before a dramatic increase began in July. Actually, that dude withdrew all of his money. At the time, Bitcoinist reported on a single node entering with a capacity of 35.4 Bitcoin. Yeah, that's a lot of fucking Bitcoin. Which at the time doubled its size. The node has since all but disappeared, leaving familiar names such as Bitrefill and less familiar entities leading the capacity count. Analytic injustice. Despite the continued rapid expansion of Lightning, the technology continues to spark sporadic criticism, which proponents have now begun to counter. Responding to claims from sources such as Bitcoin.com affiliate David Shares that Lightning nodes were centralized, the developer known as Stomp and Decrypt demonstrated that the way visual maps represent them gave the illusion of centralization. Yeah, like 300 out of the fucking nodes are connected to one node, but there's no centralization here, man. Quote, "The fact of the matter is, the network graph actually does a really terrible job of presenting the Lightning Network to you. It's pretty and fun to play with, but it does everyone involved an analytic injustice," he wrote in a blog post. Aside from impressions, critics have also raised questions over the extent of Lightning's ability to process transactions despite more Bitcoin-related businesses implementing functionality. As Bitcoinist noted, transactions over around 3 cents are unlikely to be successful under current conditions, as developers focus on improving robustness, while these sums involved are comparatively small. The network continues to attract support from its major proponents, including Litecoin creator Charlie Lee, who forecasts Lightning's various implementations, beginning with Litecoin and Bitcoin, would form the ultimate decentralized exchange. Oh, let us know about Lightning. Let's see if anybody actually commented on this one. One comment. Great. That's it. Bubba says great. Yeah, I don't know. I think it'll probably get some additional nodes and whatnot, but as to whether or not people will use it, that's the real question. You know, personally, I have no intention of using it, so I don't really care if it blooms and blossoms and so on and so forth. I really don't care. I mean, if people do decide to use it, good for them. Personally, I'm just as fine using Verge to do the same exact thing, except on chain. So, yeah, like I said, to me it's a boondoggle that creates a lot of leverage points for a third party to monopolize certain segments of the Bitcoin system. You know, there's always this talk of decentralization and whatnot, but I'm here to tell you that I've read a lot of legislation with regard to transactions and digital transactions and whatnot. I'll only tell you something. Those fucking people are ahead of the curve with regard to figuring out where they want to try and tax and pinch Bitcoin and cryptocurrencies. They're way ahead of the curve. The question is, though, is whether or not the market will express itself in ways where their how should I say this, their legal frameworks will actually be effectual. And see, I see even now these institutional investors that are coming into this space, they're primarily doing their shit either A, off-chain, or B, OTC. They're just as eager to have their shit under scrutiny as anybody else involved in cryptocurrency. I.e., they have zero interest in that. So, I mean, what does that really tell you? They're not looking out for security or safety for customers or any of that other bullshit. They're just looking to kick you the fuck out of it. And see, I think that's the wrong-headed mentality about it, because it's going to lead to one of two things, but we're always going to end up back where we started. It's going to end up to a lot of people going to jail for no reason, being the result of unreasonable and inapplicable and ineffectual legislation being applied to this in an effort to try and regulate it. You know, I think this market, it should be pretty evident by now that it responds to market demand. And if market demand is for highly anonymous transactions and quote-unquote decentralized exchanges, person-to-person exchanges, the market will shift to where those are still possible, away from all of the places where you've blocked that off or made that difficult or made it impossible or made it too expensive, whatever. The market will respond to the pressures you put on it. And so if you put more pressure on detecting and regulating and permissioning and all that other shit, you're going to push the focus of technology on circumventing you. Because the vast majority of the market really doesn't want to entertain your bullshit. Sorry. It's the news flash. Why do you think cryptocurrencies exist to begin with? Why do you think they were initially popular to begin with? Because they were an alternative to you. Anyway, let's go ahead and throw it down. A little bit of clutch here. Escape from the prison planet. Here on CoinMetal. And that was Tool with Vicarious. So I got this one last article, and I've been holding on to it because I think it's really funny and kind of ironic that we should see an article such as this when at the root of the U.S. economy is the Federal Reserve. And there's always this talk about cryptocurrencies with regard to with regulation and all that other shit. It's like these people are the primary creditors that keep the U.S. economy functioning. Anyway, let's go with this thing. This is on WSJ.com, Wall Street Journal. We'll never know how bad the Federal Reserve is. And this is by James Freeman, authored August 7th, 2018 at 11:58 a.m. Eastern Time. Senator Rand Paul still hasn't persuaded his colleagues to audit the Federal Reserve's conduct of monetary policy. Perhaps lawmakers could simply agree that the Fed should stop destroying documents. Borrowed Time, a history of Citigroup publishing today and authored by your humble correspondent and Vern McKinley, that is, finds that the bank was in many ways healthier and more stable during the century when it was independent than during the roughly 100 years it has been supported by the federal government. But the government has been working hard to prevent such stories from being told. Take the early 1990s, when Citi ran into trouble with bad bets on U.S. commercial real estate. To understand exactly what happened, it would be useful to go back and look at the Office of the Comptroller, the currency's examination reports from 1991 and 1992. Bank examiners normally put particularly juicy details about what they find in a confidential section that is not shared with the bank, and today this might represent a goldmine for financial historians. Such reports are available going back all the way to the 1860s, and the record lasts into the 1930s. But oddly, these examination reports cannot be accessed for later periods due to the Federal Records Act of 1950. For decades now, the government's standard practice has been to warehouse individual examination reports for banks like Citi for 30 years while refusing to release them, citing exemptions under the Freedom of Information Act. After 30 years, the feds then destroy the reports. Based on the schedule, at some point during this year, the federal government will destroy the Citibank examination records from 1988. A few years down the line, the records from the early 1990s downturn will cease to exist. Counterintuitively, it is much easier for someone researching the history of a big bank to get their hands on an examination report from 1890 than from 1990. It is also certainly easier to repeat history if the lessons of the past are erased. Fortunately, some journalists have occasionally been able to counter the federal effort to destroy historical records in this area. One of the comptroller of the currency's contemporary examination reports was obtained by the New York Times in 1992. The report chronicled the troubles of Citigroup Mortgage, which during 1989 was the nation's largest mortgage lender. Its operations went south in the ensuing years, and it had negative equity capital of $80 million at the end of 1991. Citicorp then pumped $172 million into its mortgage unit, most of which was consumed by additional losses. When an institution like Citi has problems, as it did during the early 90s, a regulator would normally catalog all the bank's weaknesses in a written agreement in which the bank promises to sin no more. Citibank was placed under such a memorandum of understanding, but you can't read it. In response to a FOIA request, the comptroller's office claimed that, quote, after a thorough search, staff were unable to locate the document. The regulator also said that, quote, memorandums of understanding are not disclosed to the public. Margaret McCloskey Shanks, Deputy Secretary of the Federal Reserve Board, responded by letter to a FOIA request with the potentially good news that Fed staff had found 13 pages of information responsive to the request. Quote, I have determined, however, that this information constitutes confidential supervisory information regarding a financial institution, added Ms. Shanks. The Fed official claimed that the material was therefore exempt from disclosure. It will not be immediately clear to most taxpayers why such information needs to be kept confidential for more than 25 years. How about a century? Citi's troubles in the past year, in the years following the creation of the Federal Reserve in 1913 are especially intriguing. That's because for nearly 80 years prior to the creation of a federal backstop, the bank had been rock solid. Yet, by an amazing coincidence, the creation of a new federal government safety net was immediately followed by an era of reckless investment overseas. In early 1917, the institution we now call Citi opened a Russian branch just months before Soviet communists seized power. It turned out protecting shareholders of a big U.S. bank was not high on Lenin's agenda. Back in the U.S., regulators started to recognize problems in 1919, and the bank became a heavy consumer of government assistance. In 1920, its borrowing from the Federal Reserve Bank of New York surged, according to an examination report. But good luck getting the details on this emergency lending. The New York Fed says it is unable to locate any such records. They were probably destroyed a long time ago. How will Americans ever fix problems in a federal bureaucracy if we're never allowed to see them? Holy shit, and there's like 492 comments on this, and we're not going to read an nth of them. Wow. Oh, well, we'll do this one. This was by Lynn McLinden, approximately five minutes ago. This link provided nearby by June Patterson deserves great emphasis. The Federalist 2018, blah, blah, blah. Senator Feinstein's ties to China go way deeper than alleged office spy. Quote, Senator Dianne Feinstein's warm relationship with and advocacy for communist China go back decades and involve millions, if not billions, of dollars. Dianne Feinstein's dealings with the Chinese must be investigated, but so too ought the links between federal officials and all of our adversaries, be it the Chinese, the Russians, the Pakistanis and Iranians, or the Muslim Brotherhood and its state supporters. Feinstein is only one politician. How many other relationships with American politicians have the Chinese and our other adversaries fostered? How many spies might they have recruited? Wow. That's interesting. Although I don't know how that relates to this particular thing. But yeah, we will never know how bad the Federal Reserve is. Well, let me put it to you this way, dude. A clue of how bad they are is this. In 2008, a guy named Satoshi Nakamoto got together with a bunch of friends and started their own cryptocurrency network. Their own currency network, that is. And invited everybody who wanted to get in on it. And here we are 10 years later. With state and federal and international regulatory bodies all scrambling over one another trying to get the goddamn cats back in the box. To that effort, I just gotta say, it's not gonna happen. It's not gonna happen. As a matter of fact, we're going to close this episode out. I'd like to thank you all very, very much for listening. I certainly do appreciate the support. I'll do my best to get this up on my YouTube channel, where if you did miss any of it, you'll be able to find it. And we'll be back again on Friday at 8 p.m. Pacific Standard Time. So until then, I'd like you all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. Thank you again for listening, and you all have an excellent evening. Going to close it out with a little bit of Within the Ruins, New Holy War, Last Dance here on Coin Metal. Thanks again, and good night.